Recession, recession, recession. It's the word that you keep hearing. It's a very scary word. You're worried about your portfolio. Your portfolio could go down to zero. That's what you hear in the media. Every day there's different data points that come out and they say it's going to be worse and worse and worse. Well, something that I like to do, and often you'll see it in other videos that you watch, I go back to the last recession. I'm not talking about COVID. I'm talking about the last true recession that happened. And that was the 2008 financial crisis. I'm going to go through 8 companies right here. I'm going to look and I'm going to see what they did in profit, what they did in revenue. And a common question that I get, Mo, what is a recession-proof stock? I don't believe that there's such thing as a recession-proof stock. Every company is going to take a hit in some way, but some are going to take less of a hit. Some are going to take a hit and then recover faster. And that's a few that we're going to go through today. So the first one that I want to go through is Walmart. And guys, I'm going to go through 8 companies right here. You don't need to just focus on these 8 companies. There's thousands and thousands of companies out there. Look at a company that you like, look in a sector that you like and say, you know what? This thing didn't get abused that bad. This thing got absolutely hammered. I need to be very careful out here. And there's 2 of them in this list that I am avoiding like the plague right now just because of the sector that they're in. But let's look at Walmart. Just come to the income statement, scroll down a little bit, click over to 2008. What I like to do, I look at 2007, 2008, 2009, 2010, 2011, and these are kind of the 5 years that I like to focus on. And I look at this and say, okay, they were doing about $350 billion in revenue. It went up to $377 billion in 2008. This was the financial crisis. $404 billion, $408 billion. There was a little lag in here between 2009 and 2010, and then it went to $421 billion. So from a revenue side of Walmart, that tells me something. It says, you know what? It's a pretty stable stock. People still are going to shop there. There could be some growth there. Even go back to COVID. During COVID, where did people go? They went to Walmart. They went to Walmart because it was the only thing that was open. And if we scroll down to the income side, 2007, $11.25 billion, $12.75 billion, $13.4 billion, $14.4 billion, $16.9 billion. So you saw from a profit side, it did not affect them at all. This is the type of company that I would pay attention to right now. I'm not saying go and buy a Walmart. I'm saying when a true recession happens and stocks pull back heavily and you are very worried out there, this could be some type of defensive play. Now, it needs to drop into the right price range for you. But the theme that I want to get across right here is you need to pay attention to the numbers. You need to see what the public perception is of them as far as them spending at their store. Next one, Home Depot. To me, surface level, I think that Home Depot would have probably taken a hit back then. But the numbers are going to say what they mean. Because to me, I go there and say, you know what, people don't need to rehab their homes. People don't need to be doing little odds and ends around the houses unless it's an absolute necessity. But at the same point, if you have plumbing issues, they need to be repaired. If you have, I don't know what other issues you have in a house. I have every issue you could possibly have in a house. If you have any of those issues, they need to be repaired. And Home Depot could be good for that. So let's go back to 2007, 2008, 2009, and look at the revenue side. Almost $78 billion. 2008 dropped to $75 billion. 2009, $67 billion. 2010, $67 billion. So let's see, when did they get back to about $78 billion? Took until about 2013. 2013. So from 2007 to 2013, that's what it took them to get back to that. So for me, I look and say, look at COVID. COVID happened. People were stuck at home. People, therefore, started renovating their house. People were given free money. That's why you had a big boom. But if you look in a real, true recession like the financial crisis, a company like this, it struggled. And it took them several years to get back to those revenue numbers. Let's look at profit. From a profit side, 2007, they did $5 billion. You see the drop that happened, and it wasn't until 2013 that they got back to that $5 billion number. To me, that's a stock where I'm looking at saying, okay, if there's a true recession, you need to be very careful out there. Next one, Darden Restaurants. Ticker symbol is DRI. Now, this company compromises Capital Grille, Cheddar's Scratch, Longhorn, Olive Garden. So people still want to enjoy themselves. And I look at this and say Olive Garden, Longhorn, Cheddar's, these are companies that you can enjoy, not on the cheap, but it's less than going to somewhere like a Capital Grille, maybe less than going to your mom and pop restaurant in your town. So people still want to enjoy themselves in a recession. It's just going to be less of it. So let's go to 2007, 2008, 2009, and look what happened. This one shocks me. I thought for sure that you would see in 2007, 5.6 billion. I thought you would start falling down here. But to me, this says that people love these restaurants. They have a great brand. People stick to them. Let's look at the profit side. 2007, 218 million, and they did not skip a beat through the recession. Unbelievable. So to me, that's a company that I'm looking at paying attention to, Darden Restaurants. Because, why? You would think people would not be going there, but they were going there. Now let's look at another one in that space, McDonald's. McDonald's reported earnings today, and I went to McDonald's last night. And I was sitting in line and thinking to myself, this is a recession-proof type of company. Why? Because the food is cheaper. People can, instead of going to the supermarket, they can go and get this for themselves, spend a couple of dollars. Well, maybe not in this environment. Maybe it's like $20, but it's still less than spending $100 at the grocery store. But to me, this is the type of recession-proof stock. So let's go to the income statement and see what happened in 2007, 2008, 2009. $22 billion in 07, $23 billion in 08, a slight drop back to $22.75 billion in 09, and then they were on their merry way. So you saw this was a stable company through the recession. There was not a growth, but they didn't get hit as badly as others. And this is something that you would want to look for. From the net income side, $2.4 billion in 2007, and then a big jump in 08 in profit. This is a company that I would be paying attention to. Something like maybe even a Starbucks. Starbucks might be a little bit more of your luxury item, but I think I would even pay attention to a Starbucks. Now let's get into some tech. Microsoft. This is a company that is ingrained in everybody. I don't think that a recession is going to happen and people are going to say, you know what I'm going to get rid of? My Microsoft Office. I just don't think that that's the case. So this could be one of those companies, any type of subscription-based service that is a necessity. I'm not talking about like a Spotify or something like that, or a Shopify. I'm talking about a company that is ingrained in your daily life that you cannot get rid of. In 2007, they did $57 billion, let's call it $58 billion in revenue. Jumped to 62, a little bit of a fall. I'm actually surprised by that, by 58.5, and then they were on their merry way back in 2010. But you see, even a company like Microsoft did not have any growth through 2007 to 2009 through the thick of the recession. Coming into the net income side in 2007, 17 billion, a little fall, and then a very quick rebound. I like to see this. I like to see a decline and then a quick rebound. A company that is resilient, that is not going to let the politics of the day, the economy of the day, anything like that really mess with them. So another one. This is an interesting one. Ford. This was the only company that did not take a bailout. The only car company, American car company, that did not take a bailout during 2008. So let's see what they did. In 2007, they did $172.5 billion. They fell to 145, 116, and the numbers really never got back to 172 billion. Let's see when they did. So that's 2012. Let's go to 2013, and not one time. We are sitting here in 2022, and they have still not gotten back to $172 billion in revenue. Is that really something? This is a type of company that I would say, you know what? Probably going to avoid something like this. The car industry as a whole is something I'm going to avoid. Let's go to the profit side while we're at this. All right, so they lost $2.7 billion in 2007. They lost $15 billion in 2008. Now, what are they doing now in profit? They are losing $2 billion. So this is so erratic. This is a company that I would not even pay attention to. Guys, companies that have a lot of ebbs and flows in revenue, in profit, in cash flow, those are not the types of companies that you want to seek this shelter in during any type of recessionary environment. Another one, Lennar. Any home builder. We could pull up Lennar here. We could pull up MI Homes. We could pull up Pulte. It doesn't really matter. They're all going to be doing the same thing. Going back to the 2008 and the financial crisis and the housing crisis, they were doing almost $16 billion in 2007, and you could see the fall. 8.5, 4, 3, 3.5, 4. Have they gotten back to $15 billion in revenue? Let's take a look. Basically $16 billion. It took them until 2019 to get back to those levels. So from 2007 to 2019, that's what it took them to get back to revenues of greater than $15 billion, $16 billion. Some company, so for me, and this has been something for me for quite some time, I do not like home builders. They, especially in this market, you guys have seen home prices. You've seen what's happening out there. Home prices are off the chain. I would avoid home builders like the plague, unless you know something that nobody else knows because of what I just showed you right there. These things I avoid. Now, something that gives you a little indication of where the economy is going. Caterpillar. Caterpillar's a cool stock because it's in construction. What are people doing? And this can lead you into looking at companies that do materials. So what's happening in materials? What's happening in construction? Are we still expanding the infrastructure throughout the country? Let's go back to 08 here. $51 billion. So they had a nice jump from 07 to 08, and then boom, 32 billion, 42 billion, and back to 60 billion. Why do I like to see this? Same reason as before. A company that gets hit and then is able to double that revenue and come back to their previous high. This is the type of company that I like to see. Let's look at the profit. 3.5 billion. Look at that, 895 million, and then climbed right back up to it. This is a very resilient company. I like that. And Costco. Costco is a big staple in everybody's home. It's somewhere that everybody shops. You know that they just absolutely just crushed it through the pandemic. This is probably a company that I would pay attention to in any type of recession, especially if you can maybe get the price to fall in half, something like that. But let's see here. And they didn't miss a beat. 62 billion, 68 billion, 73 billion, 74 billion. They didn't skip a beat. These are the types of companies that I would pay attention to: Walmart, Costco, and alike. Now remember, the key thing that you need to remember here, don't think of this and say, Mo just said Costco and Walmart are great, go buy them. No. You still need to pay attention to valuation. The great thing is, in any type of recessionary environment, you're going to get a pullback in stocks. It's going to happen. Look what's happening right now in the regional banks. Look what's happening right now with companies like Costco. When we're getting any type of fear out there, what happens? These companies pull back. You still need to buy companies at really great valuations. So guys, if you like this, subscribe to the channel. We do other videos like this. Come and join our software. There are tons and tons, thousands of people that have the same way of thinking that I do, that probably have the same way of thinking that you do. Come and join the software, subscribe to the channel. Have a great day.